Hello investors, it's Zil from Equity Master, bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. As we see that the Indian equity markets continue their volatile journey in 2025, mid-cap stocks are once again emerging as the sweet spot for savvy investors. While large-cap indices have shown resilience, it is the mid-cap segment that is capturing increasing interest, especially from foreign institutional investors. FIIs are selectively pumping capital into fundamentally strong mid-cap companies that are poised for long-term growth. Identifying stocks that are drawing consistent FII inflows can offer valuable cues for retail and domestic institutional investors alike. In this video, we highlight 5 such mid-cap stocks that are currently seeing notable FII accumulation. Apart from seeing buying in March 2025 quarter, these companies have also seen consecutive buying for the past 4+ quarters. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. First on our list is Prudent Corporate Advisory Services. Prudent Corporate Advisory Services, established in 2003, is a fast-growing player in India's retail wealth management industry. The company offers a wide range of financial services, including mutual fund distribution, insurance, stockbroking, and digital investment platforms such as Funds Bazaar and Policyworld. Currently, it is the 4th largest mutual fund distributor in the country. In the March 2025 quarter, FII holding went up by almost 3% from 14.7% to 17.6%. In fact, FII holding in the stock rose from 12.91% in June 2023 to 17.63% by March 2025. This consistent rise over 4 quarters highlights growing institutional confidence in the company's business model, financial strength, and future growth potential. Prudent's fundamentals support this growing interest. The company has a debt-free balance sheet, a healthy profit margin of 15.9%, and strong cash flows. The company has also been expanding its business through acquisitions. It acquired Kavi's mutual fund assets worth 80.9 billion rupees and also took over iFast's portfolio. As of first half of the fiscal year 2025, Prudent's total assets under management stood at 1.07 trillion rupees, with 96.7% of that in equity. Monthly SIP flows remain strong at 8.74 billion rupees. Promoter holding remains strong at 55.7%. Next up on the list is Paradeep Phosphates. FII holding in the company jumped from 1.63% in March 2023 to 7.17% in March 2025. That's more than a 4-fold rise in just 2 years. The most striking part is the recent surge, with FIIs increasing their stake by over 1.7% in the latest quarter alone. This suggests that FIIs see a long-term growth opportunity. Paradeep is one of India's largest private sector phosphatic fertilizer companies. It supplies to over 9 million farmers across 15 states, with a wide product range including DAP, NPK variants, and newer offerings like Nano DAP and Nano Urea. In FY24, it registered a 70% jump in volumes, selling over 2.5 million metric tons of fertilizers. The company's margins are still on the lower side, with a profit after tax margin of just 0.84%. However, it's actively working on improving profitability through backward integration, new capacity additions, and cost-saving measures at its Odisha and Goa plants. It is also emerging with Mangalore chemicals and fertilizers, which could unlock scale benefits. For FIIs, Paradeep appears to be a bet on rising food demand, rural push, and the long-term story of India's agricultural transformation. Third on the list is TD Power. TD Power is a leading manufacturer of AC generators and motors used in power plants and industrial applications. It has installed over 6,000 generators across more than 100 countries. In FY24, AC generators contributed about 63% of its revenue, showing the strength of its core business. FII holding has grown from around 12.85% in March 2023 to 19.12% in March 2025. That's a solid 6% rise in 2 years, with 1.33% added in the latest March 2025 quarter. This trend shows that global investors see strong potential in the business. The company recently posted strong numbers. For the first 9 months of FY25, profit jumped 37% to 12.1 billion rupees, while revenue grew by 26%. EBITDA margins are healthy at 17.45%, and the company continues to be debt-free with a strong cash position of 20 billion rupees. Exports are a key strength. In the latest quarter, export orders made up 71% of the total inflow, and international demand continues to grow. The order book stands at 13.1 billion rupees, its highest ever. The company is expanding its manufacturing capacity with a third plant coming up in Karnataka, targeting full operations by FY26. With strong global demand, healthy margins, a solid balance sheet, and ongoing expansion, TD Power is positioning itself for a long-term growth. Next on our list is Whirlpool of India. Whirlpool of India is a major player in the home appliances space, backed by its global parent, Whirlpool Corporation. It manufactures and sells a wide range of products including refrigerators, washing machine, air conditioners, microwave ovens, and other small kitchen appliances. The company has 3 manufacturing units in India and has recently been focusing on premiumization and product innovation. What's catching investor attention is the steady increase in FII interest. FII holding has gone up from 6.48% in March 2023 to 10.72% in March 2025. Despite industry headwinds, FIIs continue to raise their stake. From a financial standpoint, the company has zero debt and a strong cash position. It reported operational cash flow of over 5.34 billion rupees and sits on a cash and bank balance of more than 20 billion rupees. Profit margins are relatively thin at 1.9%, but the company has managed to double its profit before tax year on year and improve gross margins. It has also expanded its cooking appliances segment through the acquisition of Elisa India, in which it now holds nearly 87%. This move is helping the company diversify beyond its traditional focus areas. Last year, it launched new products like direct cool refrigerators and high-end washing machines, signaling its intent to stay competitive. While there are concerns about rising employee costs and market competition, the management remains focused on profitability and operational efficiency. There are also ongoing discussions around the parent company reducing its stake, but long-term licensing agreements will ensure continued access to the brand and technology. Last on our list is Endurance Technologies. Endurance Technologies is a leading auto component manufacturer catering to both ICE and EV segments. It supplies aluminum die castings, suspensions, transmissions, braking systems, alloy wheels, and embedded electronics. With 31 plants across India and Europe, the company serves top OEMs like Bajaj Auto, Hero MotoCorp, Royal Enfield, and European clients such as VB, BMW, and Stellantis. FII holding has climbed from 7.79% in March 2023 to 12.37% in March 2025. In the most recent quarter, FIIs upped their stake by 1%. This consistent upward trend suggests growing global confidence in Endurance fundamentals and future potential. Promoters' holding remain high at 75%, keeping the float limited and likely contributing to the stock's strong institutional demand. The company's Q3 of fiscal year 25 consolidated revenue grew 11.3% year-on-year, while profit after tax rose over 21%. The company is debt-free. It reported 5.9 billion rupees in operational cash flow and has free cash flow of 2.4 billion rupees. Profit after tax margins stand at 7.4%. The company continues to win new orders across segments. Endurance Technologies is setting up plants for aluminum die castings and alloy wheels with operations starting by FY26. It is also doubling down on research and development with new facilities and patents, reinforcing its innovation-led approach. Endurance Technologies is positioning itself as a high-quality, low-leverage, innovation-driven player in the auto components space. The recent surge in FII interest across select mid-cap stocks highlights a broader trend. Global investors are looking beyond large caps and turning to India's evolving mid-cap space for the next leg of growth. Across these names we discussed today, a few common traits are clear. Operational resilience, strategic growth initiatives, and improving financial performance are driving factors. For retail and domestic investors, tracking FII flows into fundamentally strong mid-caps can offer valuable insights and early opportunities. However, it is crucial to balance optimism with prudence. Factors like industry challenges, raw material costs, and macroeconomic shifts could influence performance. To make informed decisions, it is crucial to align investments with personal financial goals, conduct thorough due diligence, and assess corporate governance practices before committing capital. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equity Master. Thanks for tuning in.